Be Wealthy and Smart, episode 1270.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why tech is up, but crypto is flying. And this is something I've noticed that I'm not sure everyone is noticing, so I wanted to really point it out to you. But first, I wanted to talk about what I podcasted about last time, and that is about interest rates coming down. We're starting to hear more and more people talk about interest rates coming down. That was a very unpopular opinion just a few weeks ago. Now they're saying recession is coming, which I'm not so sure we're going to have a recession. I think we could have a softer landing, but I also think that rates are going to come down in a big way. And that is what Austin Goolsbee, the Chicago Fed president, said. We could see interest rates come down faster than we have in a century. So if you haven't listened to that podcast, I really encourage you to go and listen to what is happening and what the insiders are saying about interest rates, because we're really starting to see them trend lower. And that is going to drive tech stocks higher, but it's going to make crypto fly even more than tech stocks. So here's what I mean. This year to date, the NASDAQ is up a whopping 30%. Now that is a phenomenal return by any measure. And after what we've been through in 2022's bear market, it's a welcome sign to see the market come back strongly. Now, the S&P isn't coming back as strong. It's been dominated by what they call the Magnificent Seven mega cap stocks that have been providing most of the performance for the S&P 500, and most of the rest of the companies aren't doing all that much. And that's a function of earnings, because if you're earning more, you're going to have higher profits. And if you have higher profits, you're going to have a higher stock price. The problem is that a lot of the savings that are causing the higher profits is coming from artificial intelligence. And the market is saying basically only the mega cap companies have been able to implement, or they're seeing 6 months in advance that AI is going to be implemented enough to really increase the bottom line of these mega cap companies. That's why just a handful have really been jumping ahead, because AI is driving that. Now, I've talked about AI being the next big trend that is like the dot-com era. And this, to me, looks a lot more like the decade of the 90s than the decade of the 70s. Some people are going to disagree because they're focused on inflation, and the 70s decade was known for inflation. And so therefore, many people are comparing it to the 70s. I think with all the technological advancements that are happening this decade, it's going to look more like the 90s, because AI and electric vehicles and flying cars and genomics and lithium batteries and faster computer chips and digital assets and tokenization are going to impact a lot of profitability this decade. So I believe that this is the quantum age, and we haven't even begun to talk about quantum computing yet and the changes that that's going to make this decade. That comes later on. First, we've been introduced to AI, and that's the trend that everyone's focused on right now. But we do have all of these technologies converging very soon, and that is going to drive profitability, both in stocks and in crypto. Now, last year, we had the devastating bear market, and that was mainly due to the fact that interest rates were increasing very quickly. And the market anticipates about 6 months in advance. So when Jerome Powell started raising interest rates, the market was already anticipating that things were going to slow, that the real estate market was going to slow, that banking was going to have some issues, that profitability was going to be more difficult, wages were going to rise. until eventually unemployment rose. And when we got to higher unemployment now, as I mentioned in the last podcast, jumping by 0.5% in 1 month, that is an indicator that we have major slowing ahead. And that's why Jeremy Siegel and the Chicago Fed president were saying interest rates are about to decline and need to decline right now, like immediately, because the unemployment indicator is flashing a very serious change and slowing economy. Now the market is looking 6 months ahead, anticipating that rates are going to start to come down. So you're going to start to see technology move in advance of that reality. And with tech stocks already up 30% this year, it's because it's already been anticipating it. But when you look at crypto, our favorite crypto XRP is up 98% this year, 3 times what the NASDAQ is up. XDC, another one of our favorite cryptos, is up 127% this year, 4 times what the NASDAQ is up. And XLM is up 76% this year, over twice what the NASDAQ is up. So yes, the NASDAQ is doing well and it's up, but our favorite cryptos have been flying and they're about to fly even more. Technology loves interest rates declining. It does better. Growth stocks do better in a lower interest rate environment. So tech stocks are going to move ahead of that. And crypto is highly correlated to the NASDAQ, but it will perform even better than the NASDAQ. So if we have a strong trend in the NASDAQ, which I believe we do into next year, we're going to have an even stronger trend in crypto. And we've been seeing the best rally in stocks since 2021. For 2 years, we haven't seen the kind of rally that we're having right now. And many people are missing it, but we are seeing the shorts cover, as I said, was going to happen. It is happening right now, as quoted in this article, in which Goldman Sachs said hedge funds pile into U.S. stock rally at fastest pace in 2 years. That was November 6, 2023. So we are seeing the shorts being covered by the hedge funds. They're piling into the rally. They're coming back into stocks. This is also going to lead this huge bull market that's coming for the next 6 to 8 months into the first half of next year. So ignore the negative news. We're not having a housing crash now. Yes, some markets like Las Vegas and Phoenix, which tend to rise more than all other markets, are seeing real estate prices having to come down. But that's a lag effect from interest rates peaking and no one buying homes at these elevated interest rate levels. As soon as interest rates come down, housing is going to be on a tear again, and everyone who can qualify for a mortgage is going to race in to get those lower mortgage rates, and the housing market is going to take off for one last spectacular boom. So get ready. It's going to be a really interesting year in the next year. And it's time to not only own tech stocks, but also, in my opinion, for bigger gains, you need to also own some of the leading cryptos that have utility, that have use cases, that have real purposes, not the speculative ones, not the meme coins, but the ones that are seriously changing the speed of transactions, the cost of transactions, because now we're moving into the mainstream era of crypto, as Bitwise says, and I agree. And we're coming into tokenization of assets, which is going to revolutionize financial services, make it so much easier as sending an email. It's coming. It's almost here. Make sure you're positioned for it in your portfolio. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.